Yeah, I feel like I graduated from Bitcoin University. Started August 10th, 2020. Just kind of finished my senior year. If Apple makes $500 billion in selling the iPhone and then they pour the $500 billion back into buying their own stock, MicroStrategy is up 964% since August 10th, 2020. Nvidia is up 934%. So we're still outperforming all of the 500 S&P. Nvidia is the number one performer in the S&P. Bitcoin's up 387%. Microsoft, Tesla, Google, they're all up like 100%ish. I keep track of all the various asset classes since we got into this, and that's also very interesting. The S&P is up 66%. So Bitcoin is like 6x. Bitcoin is 388 versus S&P 66. And gold's up 25%. And silver is up 3% and bonds are down 16%.
Yeah.
Yeah, so the interesting thing, of course, is no one would have thought that MicroStrategy could outperform all 500 members of the S&P 500. I didn't even think that. In fact, we didn't even realize that. That snuck up on us. It didn't. Our benchmark wasn't that. Our benchmark was Bitcoin, right? So we were actually just trying to keep up with Bitcoin. So I think you could have guessed that Bitcoin would actually outperform the S&P. And our initial goal was, how do we get to the point where our company's market cap tracks Bitcoin's market cap? But, along the way, we levered the company and the only way to beat Bitcoin is more Bitcoin. Right. And so, and that's why every time people offer you, they pitch you all these business ideas, right? And they're like, well, do you want to invest in this business or that business, or do you want to invest in this real estate? And I say, well, Bitcoin's up like, 46% ARR every year for the past 4 years. So, and that varies, but anywhere from 45 to 55% is the ARR for Bitcoin. So I think, okay, so 50% is my risk-free return. So are you going to give me a proposition which is risk-free better than 50%? And of course, no one's got a proposition that's risk-free better than 50%. So then the question is, well, how the heck are you going to be better than Bitcoin? And the answer is, the only good idea is borrow a bunch of money for 5% and buy Bitcoin with it. Right? If you can borrow money for 0% or 1 or 5 or 10% and you're buying Bitcoin and it's returning 40 or 50%, then that's a good idea. So I think Bitcoin's a good idea. I think different ways to securitize or lever Bitcoin, some are bad ideas. Like, for example, trading 20x leverage on Binance on Saturday night, that's not a good idea. Trading on FTX, on the crypto exchanges with like mark-to-market massive leverage is not a good idea. Really, the risk-free rate has got to be the after-tax bond yield, so maybe it's 3%. So it's 3% if you think conventionally in fiat terms. But if you're thinking Bitcoin terms, it's 29% for me. You can have a different forecast. But it's very clarifying, right? Because as soon as you actually set that, you think, well, there's really nothing that interesting to me other than what's interesting is companies that can raise capital to buy Bitcoin and intelligent leverage ideas, like raise $1 billion for 0% interest and buy Bitcoin with it for 7 years. Like, those ideas are interesting to me, but there has to be Bitcoin on one side of the idea, and the other side of the idea needs to be an arbitrage of the extremely cheap fiat interest rates. Anybody can go and adjust these things and make their own assumptions about what'll happen, and then they can come up with their own macro view of the world. That's what's cool about the model. And I would definitely encourage you, Safe, to grab the model, look at the assumptions, tweak it, and come up with your own Bitcoin view and your own macro view. Because I think when you start to ask the question, how does equity sit with real estate, sit with bonds, sit with currencies, and art and gold as a long-term store of value. That's very interesting. I mean, I think you've encouraged all of us to think that way. And, I just see the world as there's a bunch of assets that have utility value. And then there's assets that are primarily store of value. And if you think about the portion of, our long-term capital, our store of value, clearly that ought to be moving toward Bitcoin much faster. And then, everyone's going to want to have their place to live and things that they like, that they brag about, their trophy assets. My self-image is I own the football team, right? And so some people will pay a lot of money because the idea of being the owner of the New England Patriots is worth billions of dollars to them if they're a citizen of Boston or something. So there'll be things like that. But ultimately, clearly, Bitcoin is global capital, and it's the best asset. So we think it'll grow the fastest. And that model, my base case there is 0.1% of the wealth in the world growing to 7%. Well, again, I would encourage you to actually take the Bitcoin 24 model, find a way to crank your assumptions in and spit out the nominal map or the heat map of the asset distribution in the year 2045 and show that versus the one that we've created. Because you want to go back to the one that we have in our base case?
Yeah, here it is.
You can debate it one way or the other, but here in this base case, we're assuming that even if Bitcoin grows at 29% ARR, and that's a nominal ARR, right? Then bonds are actually going to be a larger asset class than Bitcoin in the year 2045. And, and equity will be a larger asset class and real estate will be a larger asset class. So we're only forecasting in this base case that Bitcoin will be much larger than gold. We're not forecasting it would be larger than the class of all equities or the class of all bonds.
I did it.
So
I made Michael Saylor sound bearish on Bitcoin next to me.
So I don't really know. If you want to generate your own forecast, it has to be in nominal terms in the year 2045. Then we can compare it to this one and talk about the difference. But I mean, the whole point of that model is everybody can crank in their own assumptions and spit out a result in nominal terms over the next 21 years. And it gives you charts and it gives you the heat maps. And I think if you look back, the money supply versus the S&P has been pretty correlated. So if the M2 money supply expands at 7%, I would expect that equity will track that. And here, this is a bit bullish. There's an assumption here that equity will outperform the money supply, but you can come up with a bearish assumption where equity underperforms the money supply. I mean, clearly, this chart is we're a bit bearish on bonds. Bonds aren't growing as fast as an asset class. Real estate is tracking. Equity, we're kind of bullish on. Art, we're a little bit bullish on. Maybe we shouldn't be. And then gold, we're very bearish on. And Bitcoin, we're, triple bullish on. So that's what this assumption is. I don't think the bonds are going away. I think as long as we have nation states and we have cities and states, they're going to borrow money and they're going to keep expanding the sovereign debt, and I think there'll be corporate bonds as well. So I don't think they go away, and I don't think equities go away unless we lurch into a socialist, more communist type state. I think the argument in favor of equity values going away is you have to basically argue that the state will move to expropriate, regulate, and tax out of existence the equity values, and they could. So this is kind of bullish on capitalism.
Well, I mean, buying Bitcoin effectively is shorting them in a way.
Yeah. The takeaway from this is that Bitcoin can win and the world doesn't necessarily have to turn upside down. Right, but when Bitcoin is the global monetary asset or the global monetary index, it still may not be as big as equity capital. It's just going to become much, much more material than gold and much more useful than gold. And this is an optimistic forecast. If you come up with a pessimistic forecast is the only thing that's left is Bitcoin, right? Like, for example, if I have a pessimistic view of a nation state, the stock market collapses and the equity goes to zero. and the currency collapses and the money supply is not worth anything, right? And maybe the real estate isn't worth that much because the rents aren't worth that much. But the challenge is, it's I mean, it's easy to forecast that for Venezuela or Cuba or North Korea or in Nigeria, right? You can forecast it for a small developing country that's either poorly run, mismanaged, or communist, or or dysfunctional with hyperinflation or a war zone. It's hard to forecast that for the entire world. Imagine a forecast where all the currency of the world goes to zero and all companies go to zero. Well, that's a big problem. So I'm not thinking that. And this is just a global macro model. It's not a micro model. So in the global macro model, the assumption is the world government works, all these governments work through a bunch of issues, and they eventually figure out how to not make things much worse. And then technology advances, and we get humanoid robots, and we get AIs that actually do useful thinking. And then we figure out how to, unleash, the power of 100 million AIs to make the world a better place. And there'll probably be companies that make a fortune, the next Facebook, the next Google, the next whatever, and their equity market caps will be quite high. And meanwhile, capital will be created by human productivity, and a lot of that capital will flow into Bitcoin because Bitcoin's digital capital. Some of that capital will flow into real estate and equity. I mean, companies are going to overcapitalize. Like if Apple makes $500 billion in selling the iPhone, and then they pour the $500 billion back into buying their own stock, right there, they're kind of supporting Apple as a long-term store of value capital asset by pouring their $500 billion into Apple stock. Is I pour all of my cash flows into buying my own stock back, and that's what Meta's doing right now, and that's what Apple's doing right now, and other companies do some of that. If the U.S. government had to pay 12% interest right now, don't you think there'd be a lot more consensus to cut cost? Maybe there'd be consensus to raise taxes, right? That's a political thing, which is kind of above our pay grade, right? We don't get to decide whether they cut costs or raise taxes. But what we can agree is the debate over running deficits would get much more pronounced. And I think that over time, it's going to be these governments, right, and sovereign entities and nation states, and not just nation states, but states and cities and counties and agencies. All of those will presumably act more rationally as the cost of capital increases. And that's what this is all really about. It's introducing a rationality virus. And I would argue the best thing for the world is if the rationality virus spreads gradually, progressively, gracefully, gently. Because when the rationality virus, hits you, like you saw what happens in Greece with austerity. When you get this austerity lockdown overnight, you get riots in the street and you get human misery, and the government, collapses. And when the government collapses, the hospitals stop working and the ambulances stop working and the police force stops working. And so I'm not in favor of too fast. I'm in favor of gradual, graceful, gentle, kind spreading of the rational virus, which I think will get us to, a different place. But what is that place? It's hard to forecast. I mean, the world's very complicated, very complicated.